Ladies and gentlemen, good day and welcome to the Mallcom Limited Q4 FY22 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorum Advisors. Thank you, and over to you, sir.
Thank you. Good morning, everyone, and a very warm welcome to you all. My name is Anuj Sonpal from Valorum Advisors. We represent the investor relations of Mallcom India Limited. I hope you're all doing well, and on behalf of the company, I'd like to thank you all for participating in the company's earnings call for the fourth quarter and financial year ended 2022. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's con call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's call and hand it over to them for opening remarks. We firstly have with us Mr. Ajay Mall, Managing Director, Mr. Giriraj Mall, Executive Director, Mr. Shyam Sundar Agarwal, Chief Financial Officer, and Mr. Rohit Mall, General Manager. Without any further delay, I request Mr. Ajay Mall to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good morning, everybody. It is a pleasure to welcome you to the first ever earning conference call for the fourth quarter of the financial year 2022. Firstly, I hope that everyone is keeping safe and doing good. Given that this is the first ever earning con call, in the interest of some of the people who are new to the company, let me first start by giving a brief overview of the company. Mallcom India Limited is a 4-decade-old company and is one of the largest manufacturer and distributor of personal protective equipment produced in India. It provides one-stop solution for manufacturing one of the widest range of head-to-toe PPE products. The company is also one of the largest exporter of PPE products from India, exporting to 55 plus countries across 6 continents. We have a very varied manufacturing footprints with 13 production facilities spread across India, and over the years we have focused on backward integration wherever possible, resulting into significant cost savings and gradual margin expansion. Our integrated manufacturing facilities are used to module, assemble, customize and package the different head-to-toe protection items like body protection, hand protection, and feet protections. Each of our facility have in-house test laboratories, and performance testings are done to ensure the compliance are with the international quality standards right from the production cycle. Now I would request Mr. Shyam Agarwal, our CFO, to brief on the financial performance of the company, after which Rohit can take brief on the operational highlights. Thank you very much.
Thank you, Ajay, and good morning, everyone. Let me first brief you on the fourth quarter financial performance of FY22 first and then for the full year. On a consolidated basis in quarter 4 FY22, the operating income for the quarter was rupees 106 crore, which was an increase of approximately 8% on year-on-year basis and an increase of 15% on a quarter-on-quarter basis. Operating EBITDA reported was rupees 14 crore, which was an increase of about 1.4% on a year-on-year basis and an increase of 9.4% on a quarter-on-quarter basis. Operating EBITDA margin stood at 13.21%. Net profit after tax reported was about rupees 9 crore, which was a decrease of about 11% on a year-on-year basis and increase of 21% on a quarter-on-quarter basis, while PAT margins were reported at 8.77%. Now let me brief you on the financials for the full year of financial year ending 2022 on a consolidated basis. The operating income for the year was rupees 357 crore, which was an increase of approximately 13% on a year-on-year basis. Operating EBITDA reported was rupees 50 crore, which was an increase of about 20% on a year-on-year basis. Operating EBITDA margin stood at 13.90%. Net profit after tax reported was about rupees 32 crore, which was an increase of about 12% on a year-on-year basis, while PAT margins were reported at 8.84%. Now I request Mr. Rohit to explain the operational highlights.
Thank you, Shyamji. Good morning, everyone, and thank you for joining us today. On the operational front, for the quarter under review, we initially got hit by the sudden surge in COVID-19 cases in the beginning of the quarter, but the company was able to bounce back, supported by better realizations. Our margins in the quarter were impacted due to higher raw material costs and freight costs, like all other companies. Depreciation has increased on quarterly and yearly basis as a result of the ongoing capital expenditure projects, which is the primary reason for the year-on-year decline reason in some profitability. For the financial year ended 2022, we commenced operation from our new plant in Ahmedabad, with regular orders being shipped to Europe. Phase 1 of our ongoing capex at Ghatakpukur in West Bengal is expected to commercialize on 1st July 2022. From business development point of view, the signing of multiple FTAs with Australia and UAE has opened up these markets for the company, and the company is making to break through with the new contracts being signed in the coming financial year in these geographies, and is also targeting countries like UK and Canada regions, and also expansion in US market subsequently. The company has focused on reducing debt by utilizing the cash flow from operations, through which our net debt to equity has come down significantly. Lastly, I'm happy to report that the Board of Directors have recommended a dividend of Rs 3 per equity share for FY 2022, subject to shareholders' approval. Thank you. With this, we can now open the floor to question and answer session.
Thank you. We will now begin the question and answer session. Participants who wish to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, good morning. You are able to hear me?
Yes, I can hear you.
Yeah, okay. So the first question is, so I think, we have completed our Ahmedabad expansion, and phase 1 of Ghatakpur also will get completed in July. So both put together, what is the total capex that we have done? And at peak utilization, what kind of revenue do we expect? And in terms of ramp up, do we think that we should be able to reach peak utilization in couple of years?
Is the management able to hear the question?
Yeah, Shyamji, if you can answer.
Yeah, regarding the investment, I would say we have invested in capex in Ahmedabad facility around 18 crores, and in Kolkata facility we have already invested 15 crores. So total investment is till now 33 crores in capex only, and for Ahmedabad facility it is 25 crore altogether, and in Ghatakpur capacity it is first phase on the completion side, so we expect another 10 crore which we will be investing. So altogether investment would be around in excess of 42 crores.
Okay. And sir, this will generate peak revenue of what, 100 crore odd?
Yeah, that is what we expect. Yeah, it should be both the facilities should be generating in excess of 100 crore, turnover. Yeah.
Both put together, right?
Yeah, both put together, yes.
Okay. So in terms of utilization, do we think that we should be able to reach 75-80% in couple of years for both these facilities?
Yeah, this is what we are doing now, even for our existing facility, and that is our plan. That as soon as possible, we would like to have the maximum, capacity utilization. So these projects normally are not, it takes maximum 1 to 2 year time when you are operating at optimum capacity. So that is what we are targeting.
Okay. Okay. And sir, I think if I understand correctly, most of this capacity is going towards apparel. So in terms of margin profile, are these products having better or equal margin profile than our company average today, or if you can throw some light around that?
Yeah. So basically, both these expansions are primarily for garmenting, and there we have, I would say, whatever EBITDA margin we have in the business altogether, it will have slightly higher margins. So that is our target. That we have to be in the business where we have quality and quality product with the better margin. So this is what we are targeting now.
Okay. And the last question. So in terms of FY23 and FY24, in terms of capex, are we expecting similar 30-40 crore capex every year for FY23 and FY24?
No, that is not planned. We presently have, these two projects which are going on, and we have not planned for another, there would be extension. So this Katakpukur project is phase 1 only, and then we have plans for the second phase and third phase also. But as of now, that needs to be fixed. So it is not, as of now, we cannot communicate on anything about that. But we have plans, definitely.
So FY23 capex would be 15-20 crores. Is that a right number?
Yeah, it should be on, should be in the range of 10 to 15 crores next year, FY23, yeah.
Okay, and that is more for completion of the existing projects, right? Both phase one.
Yeah, and normal expansion also. Whatever, normal capacity expansion we do for other product categories also.
Okay. Got it. Thanks. I have more questions. I'll come back in. Thank you.
Thank you. We have the next question from the line of Krishna Agarwal from Niveshaay. Please go ahead.
Firstly, congratulations on the great set of numbers. My first question is regarding the trade receivables part. Like I see in the balance sheet that in trade receivables, the majority part is from export market. Like 95% is from export. So is there any difference in the terms of contract in export and domestic that we see such a huge number in trade receivables of exports?
Rohit?
Hello.
Rohit?
Hello.
Yeah, Krishna, if I understand your question, this is Giriraj Mal here. So if I understand your question, you are asking if particularly in garment, if we have got more than 95% export sales, and is it because of the compliance, right?
Sorry. I'm saying that in trade receivables, the bifurcation has been given in the balance sheet. In that, the export outside India outside India trade receivable is 90-95%, and from within India it is 5% around. So, any specific reason for the same?
No, matter of fact, I'm answering. So it's 60 or 2/3 of our volume is coming from exports, and 1/3 is from the Indian domestic market in our own branded market. So I'm not sure where are you getting this 95% figure from.
I think Shyam can answer this because most of our trade receivables, which are from foreign parties, are on a DA or an LC deferred DA terms, and that's why this is more on a lag of receivables in the export bills realization. So far as the local market sales are concerned, they are mostly on a terms which are either cash payment or a very small credit which we grant to only very few dealers network what we have. Is that satisfied your answer? I mean your questions?
Yeah. Also, second question is, what is the share of contract manufacturing in the total revenue that the private labeling business of?
Yeah, this two-third is private label, and one-third, a little more than one-third is for branded sales.
And do we see any change in the mix, as in more share towards branded and less towards private labeling?
Yes, we are putting our endeavors to do more on branded sales, and yes, the metrics has to be a little bit more towards 50-50 kind of stuff. We are planning on that.
And this private labeling is majorly from export only, or it's domestic as well?
No, mostly for exports.
And what would be the margin difference between the private labeling and branded, if you can provide?
Shyam has to answer. I don't know this.
Yeah, it is almost similar, So it depends, not private or branded. Basically, it depends product to product. So on average, it is almost similar. Maybe branding, we have a little bit, slightly better margins in case of branding.
And last questions are on the guidance and any revenue and EBITDA margin guidance for the FY23.
Yeah, it would be. We are targeting around, this year we could achieve 12% growth. We would like to have more than this. So it should be in the range of 12 to 15%. And EBITDA margin, as you can see, it is improving. This year it is 13.9%. So we hope that we improve on this, but this should be the minimum. Yeah, this is what we are targeting.
Okay, sir. Thank you. That's it from my side.
Thank you. We have the next question from the line of Ankit Gupta from Bamboo Capital. Please go ahead.
Yeah, thank you for the opportunity and congratulations for the resilient set of numbers in these tough times. Sir, first of all, on this Ghatakpur plant, if you can clarify the Ghatakpur plant that we are setting up, it includes capacity expansion as well as some shifting which will happen from one of our Kolkata plants, isn't it?
Yes, this is Rohit. Yes, you're right.
Okay. So like the 25-30 crore capex that we'll be doing in phase 1 also has some portion which will be shifted out and some will be for the capacity expansion. But on a combined basis, Ahmedabad and Ghatakpur can add 80 to 100 crore additional revenue to our total revenues at optimum capacity utilization.
Yes.
Okay. And secondly, on the export sales, if you can talk about, both the expansions in Ahmedabad and Ghatakpur are on the apparel side. And even on normal in textile companies, we are seeing that on apparel side, on garmenting side, there is a significant shift which is happening from other countries to India. So is it the same which is happening in apparel for Mallcom as well as for other products that we manufacture in export markets?
Yeah, definitely. There's a China plus one strategy which is coming into the picture. Plus, like we mentioned, India is signing FTAs, which is benefiting us, and the export infrastructure is improving. And we are looking to, service to bigger players, and that's why we need more capacity. So all of these things are playing a role.
Okay. Rohit, if you can talk about how many customers do we have on the contract manufacturing side or export side, and how many customers have we added over the past year or two, let's say FY21 and FY22?
I think Mr. Giriraj will be able to answer this.
Yeah, so as of now, we have got around 55 or 56 plus customers across 6 continents, and out of which almost 75 to 80% are our regular customers, and some are price sensitive customers which keep on changing. In last 1 year, we have precisely added, with, if I'm not mistaken, around 7 to 8 customers, which comparatively are smaller in size, but definitely over a period of time they will contribute to a good income in the company.
Sure. Also, to take this point further, sir, if you can broadly talk about whether this private labeling work that we do for our MNC partners or our foreign partners, is it a long-term contract that we sign with them? Is it that we sign a 3-year, 5-year, or 7-year contract with them for regular annual supplies, or it doesn't work like that?
No, usually it's not a contract, but usually we grow with them in the sense a lot of them give us their designs, their molds. So the product is customized to their needs. So that's how we try and lock in the customer, and that's why it's not very easy to break into or to have a change in the cost of change in supplier is high, but there's no contract which is signed for a long-term basis.
Sure. So let's say for a single product that you might be manufacturing, for example, let's say a type of apparel that you might be manufacturing for an MNC, how many global suppliers will be there for that product?
I think that's difficult to answer. Like, there are a lot of players, and as China has thousands of probably players. I don't think there's there are fairs, trade exhibitions which you can participate, and you get to know there are a lot of more than 1,000 players participating. Some manufacturers, some just retailers or brand owners. I don't think we have a definite count on that.
But there will be multiple suppliers to our customers. So it's not that we are the sole supplier for a single product.
So it depends again. So for some of the customers, we are the only supplier, but there are suppliers in the market, but they're not supplying that. Usually, that's what I think Mr. Kiraj also saying. So those who are not price sensitive, they stick to a supplier because we help build. It's done on a collaboration basis where both of us work together to build a product. And then once the product is satisfied to the customer's demand, they usually don't change. So that particular product, usually if it's not a run-of-the-mill product, there'll be one supplier only.
Sure. And on the domestic side, Rohit, we have seen that last few years we have done pretty well with the kind of growth rates that we have seen, and its proportion is also increasing year on year in our overall sales. So if you can talk about what is leading to this growth, and how do you see the domestic market panning out for us over the next 2-3 years?
So you see a lot of things happening in the domestic market. Number one is the emphasis on certification and standardization. So we are a player who brings out all certified products as per either the Indian norms or the European norms. So that emphasis is increasing. BIS is doing a decent job there. Now, we're in talks, like the government is in talks to launch a new OSH code, a labor code, which will probably put more emphasis on safety. So that's into the picture. MNCs have started manufacturing here in a big way, and they would like to bring in the global practices to India. So that's also helping us. Plus, India is building infrastructure. Plus, India is bringing infrastructure to have its own raw material, and there's a push for technical textiles. Cotton is definitely available in India. Leather is available in India. So all of these things are, I think, and just the sheer fact that the labor force is increasing day over day, I think we have a very bright prospect with the domestic market.
Sure. And last question was on the margin side. We ended this year with around 13.9% kind of EBITDA margins. and with increasing proportion of domestic market as well as in exports, we are focusing more on value-added products and like apparels and all. How do you see our operating margins at EBITDA level panning out over the next 3 to 4 years?
Shyamji, if you can.
Yeah. So as I mentioned earlier, this year also we have improved and we hope to improve further. So as we have mentioned that there has been slightly price rise in raw material cost, and since we are investing, so there would be some depreciation costs also adding up, and now interest costs also rising. So we are still trying that how much we could pass on to customer, as well as also improving the product mix where we have better margins. So our effort is always to improve on the margin. So what we see that over the next 2 years it should improve, but that is the best. Basically 13.9 we would like to maintain, and whatever we can improve on that. So that would come from our effort on the, like as we mentioned, that improving more on the branding side and improving on the product mix where we have better margins. That is what we are trying.
Sure. Thank you and wish you all the best.
Okay.
Thank you. Participants who wish to ask a question may press star and one on their touchtone telephone. Participants who wish to ask a question may press star and one on their touchtone telephone. We have the next question from the line of Aman Vij from Astute Investment Management. Please go ahead.
Yeah. Good morning, sir. My question is on the if you can talk about what percentage of our revenue comes from the customers where we are the sole or the maybe among the top 2-3 suppliers only.
Sorry, could you repeat the question? I wasn't able to follow.
Yeah. So you were explaining in the last participant question that there are some customers where there are like 1 or 2 suppliers only who are not price conscious as such. They are more focused on quality and other matrices. So my question was, what percentage of our revenue comes from such customers?
Mr. Giraj, if you could answer this.
Yeah. This is a little difficult to answer though, Aman, but yes, there are quite a few. We have not done this exercise whether there is a substantial portion of or whether we are the number one or we are the only suppliers for this company. But just for your understanding, the product which are being manufactured in Ahmedabad facility, that is going to one particular customer. So the value which we will be generating from that unit is going to one particular customer, and that customer has got maybe 3 or 4 major vendors, and we happen to be the only vendor from India, that's for sure. They are importing from China probably a few more items.
Sure, sir. Just little bit more clarity. So among the current portfolio basket, so Ahmedabad you have explained, but any other particular products where we are like this case among the top 3-4 only? Maybe not the number, but I was trying to understand which products or which categories there is less competition.
May I barge in, Giraj?
Yeah, please, sir. Please.
Yeah. So when you talk about product category, it is mostly when you are tailor making for customers, whether it could be body protection like garments, which are industrial garments with various kind of norms in it, or it could be even helmet, or it could be even feet protection, which is safety shoes. So when you are tailor making for any particular customer, there is a kind of a commitment from both the side, the customer as well as the supplier. Now there we normally forge a kind of a strong bond where we can take it forward on a longer term basis, and then you are either 1, 2 or 3 number supplier to such kind of large customers or the brand owners in the Western world. That is how it works. Numbering it, we don't know, because no customer will tell me that you are number 1 supplier to me, because that is a kind of a strategy they would have, right? So to know this, it's a little difficult, but we also can anticipate that in few cases we are definitely much closer to those customers because they are buying a big volume from us and keep doing it on a regular basis. I think that will satisfy your query.
Yeah, that helps a lot, sir.
Yeah, thank you.
That was the only question.
Thank you. We have the next question from the line of Saket Kapoor from Kapoor. Thank you. Please go ahead.
Namaskar, sir. Sir, hello.
Yes,
hello.
Yeah,
namaskar, sir. Sir, firstly, the two line items. Firstly, the raw material cost and the manufacturing and other operational expenses. These are the two large line items. So, how have these two line items, the component have fared over a period of last 1 year? Because everywhere the cost of material has gone up. So, how are these? What checks and balances are there currently for the organization to keep them in control? These cost controls.
Shyamji, please.
Yeah. So basically, see, talking of raw material cost, definitely we had seen, price rise in case of, basically what we are doing, we are manufacturing different type of products. So it is either, fabric or leather or, PU maybe. So there has been a rise in each of these categories, but not similar. Somewhere it is on the higher side, somewhere it is on the lower side. So in our case, what is happening that we have a mechanism where we normally book orders on running basis, and also we keep reviewing the prices on periodical basis. So we have tried to pass on, the price rise to the customer at maximum basis. Maximum, cases it has happened. And in case of other manufacturing expenses, yes, there is some rise in power and fuel cost, then transportation cost, then you have freight also, which was very high. So there also, the similar approach. So since it is not a long-term contract which we are doing, and we are able to, book the orders only on a regular basis, and we are also able to review the prices on regular intervals. In most of the cases, we have tried to pass on the cost to the customer, then only we have accepted the orders. So this is what we have done. So yeah, and normally what we do whenever we book the order, so there is a clear, hedging policy. We are hedging our cost, raw material cost, as well as foreign currency cost also, we hedge it. So we try to protect our margin. So this is what we are doing.
Sir, if I look at your finance cost line item, there has been there is fluctuation in it. Is it pertaining to the forex part only?
No. Finance cost, basically, see what has happened that since we are, eligible for subvention, we were getting subvention till September, and then there was a pause in the policy, and it was only renewed in the March quarter. So that's why you will see that for the third quarter there was increase in interest cost, and then it has come down in the March quarter because the subvention was granted with retrospective effect from 1st October. So there is but if you club together both cost for the third and fourth quarter, the average would be almost similar to the first half.
And sir, can you, what is the absolute number of the benefits which we are getting on an annual basis?
Yeah, so the subvention for the first half was 5%, now it is 3% of the interest cost, working capital interest cost.
Okay. And what is currently?
Yeah, as of now, till now it was around 6%, now it has gone up to 6.25%.
And sir, who are our credit rating agencies? Our debt is being rated by which, and what is our current rating?
Yeah, it is ICRA, basically.
Okay, sir. When we look at the turnover has increased from 326 crore to 367 crore. So how much of this is volume increase, and if you could give in the percentage term, in percentage terms, or and how much is the impact of the pass on of higher raw material prices?
Yeah. So basically, I would say we could maintain the volume, and the rise of 10-12% is due to price hike. So realization has been on the higher side, and volume has been almost at par, and that too because of we had targets and we tried to achieve the higher volume, but only because of COVID and all those things which kept interrupting, due to that we could only maintain the volume.
And sir, what is the time lag between the order intake and execution, and also what is the receivable cycle, working capital days, and also the cash conversion cycle?
Yeah. So basically, will you please repeat the order, this question?
Firstly, was from the time of order intake to order execution, what is the time lag, and again, what is the cash conversion cycle?
Yeah. So normally, again, it differs product to product. So whether it is hand gloves, then it would be not more than 1 month. But in case of garment, it takes longer. So maybe 2 months also. And so it depends, So on average, you can take 45 days to 60 days time. And in case of receivables, we have, again, it depends. So on average, it is around 2 months on max.
2 months?
Yeah.
Okay, sir. And last year,
I would just like to clarify that this 2 months is basically for export, and for local marketing, it is on the lower side. Yeah.
Sir, if we take the business model for the company, and this is a 4-decade one, sir, our dependence on the integration part, how much are we dependent on our raw material supplier to and how much are we vertically integrated? The dependence of raw material conversion into finished product, by what percentage do we depend on the supply chain for due to which our product can be finished? Since we take the highest of the line item at cost of material consumed is significantly 50% of what the income is. So are we totally dependent on external sources for the raw material, or do we have any further integration in aspect of that?
We have tried to do some backward integration, but mostly it is, we are talking of, suppose we have 3 major raw material, which is leather, and then fabrics, and maybe PU also. So we are definitely dependent on the basic raw material has to come only from suppliers, and then we do some integration, like we buy yarn and then convert into fabric, so that we do in house. So also maybe tanneries also, so there we buy semi-processed white, then convert this into leather. So we have some backward integration, but basic raw material has to come from suppliers.
And how much is imported, sir? Dependence upon on import from other countries?
It ranges in between 10 to 15% of the total raw material consumption.
Okay. And the key suppliers for the raw material?
Kapoor, I would request you to kindly come for follow-up questions.
Ji, sir.
Thank you. We have the next question from the line of Prashant Kumar, an individual investor. Please go ahead.
Hello.
Yes, Mr. Kumar, we can hear you.
Yeah. Good morning, sir. So my question is we are shifting machines from Kolkata to the new plant, right? So are we going to closing down Kolkata plant, or what is the thought process behind that?
Okay. It's almost ready, all capex done. For the Ghatakpukur plant, we'll be buying new machinery for expansion, as well as we'll be shifting our apparel production, workwear production to the other place. So yeah, the earlier plant that we have, that we have run out of space, and that we'd like to move. But for all other product categories, and even for workwear, we'll be having new machinery there as well. So it'll be both new machinery as well as the old one. And for the workwear, yes, we can think of doing something else there. But yeah, the earlier plant will eventually phase out.
All right. So we are planning to close down this Kolkata plant. That is what is the planning for going forward, right?
Only the workwear in the Calcutta. So in Calcutta we have, in and around Calcutta we have 11 units. Only the workwear one is what we plan to phase out and move to Ghatakpur.
Okay. So my next question is, at what capacity utilization we are working currently?
Overall?
Overall, yes.
I think it will depend on product category to category. Shyamji, if you could answer this.
Yeah, on average it is 80 to 85%, in all of the capacity for all product types.
Okay. So most of our products are exporting to Europe, right? So how do we see? Have we seen any impact due to this Russia-Ukraine war on the sale?
So our there was no exposure to Russia, and there was hardly less than 2% exposure to Ukraine, to which that has been impacted a little, but it's not completely closed down. We are still in touch with them, and I think that will be revived. So I think the other reasoning for that has been, the increase in petro-based products. So I think that has impacted all of us in the same manner, but nothing specific from Ukraine and Russia war.
No, have we seen any impact on Europe front, right? Not only to Russia and Ukraine, but have we seen any impact on Europe market kind of thing?
No, not because of the Russia-Ukraine war. No impact which can be directly linked to the war.
Okay. And out of all the products, right, which product is our high margin product and which product is our low margin product? We have an average for 13.5, 13.9 kind of operating margin. So which one contributes highest to the margin?
According to me, except I think regular leather gloves and knitted gloves, all are high or decent margin products. And even in leather or knit products, now we are working towards higher margin products. So all product categories have a run-of-the-mill product which has low barrier to entry, and then has a high-end product which more machine work or more labor-intensive work. So even in those product categories, we are moving towards high margin products. But overall, yeah, I think only leather and knitted gloves are the low margin ones.
Okay. So our CEO, Mall sir, has told that we have some customized products, right? So what is the revenue share of customized product to the client that we sell?
So 2/3 of the revenue, whatever is white labeling, those are all customized products.
Okay. So most of the 2/3 is almost 65% of our revenue is coming from customized product, right? So that is so we will be into 1 to 5 kind of vendor for them for customized product, right?
So we've answered this before that we cannot be sure of this. Yes, to some of them we will be, to some we'll be not. We have multi-billion-dollar customers who have a lot of suppliers as well. So this information we will not have whether we are top 5 for all or not.
Okay. So last question is for next 5 years, what kind of target we are? Do we have any roadmap for that for next 5 years, into doubling or tripling our top line, and we will have this kind of operating margin kind of thing? Have we any inner goals for that?
AKM Ajaymal, if you could answer this.
Well, we definitely are looking. The short-term goal would be reaching 500 crores in 3 years' time. That is what we are targeting. And then beyond, of course, in 8 to 9 years, we must see something like 1,000 crores. That is what we are hoping.
And what about the margins, like operating margin? Have we set any target for that?
I wish I could do that, but we definitely want to improve where we are. So we are always striving to improve it for betterment. And there are a lot of external factors which don't let it happen. But then, yes, we are always striving to, do it better. Yeah.
All right. Thank you very much. And it's good that you guys are organizing Concall, so we can have some insights from you guys for that. Thank you very much.
Thank you.
Thank you. We have the next question from the line of Rupesh Tatia from Intel Sense Capital. Please go ahead.
Hello, sir. Can you hear me?
Yes, we can. Yes.
Okay. So most of my questions have been answered. My one data keeping question is, what is the trading sales in FY22, sir?
Shyamji, if you could answer.
Will you repeat the question?
What is our trading sales, sir, in FY22? I think FY21, the number was roughly 42 crore.
Yeah.
What is that number for FY22?
Trading figures.
Yeah.
Yeah, it is 77 crores. So most of the products we are buying from subsidiaries only.
So then it looks like the majority of growth has come from trading products, right? You went from 41 crore to 77 crore. So can you just talk about this? What are these products? What is the margin on these products? Who are the suppliers? What is the,
Yeah, so basically, as I mentioned, these are the similar, same products which we are trading. Like we are buying, we have a 100% subsidy Mallcom BSFT from where we are buying nitrile gloves. So almost around 40 crore turnover we had from this product only. Then we had safety shoes we are buying from another subsidy which is also 100% subsidy based safety. These are all SEZ units, So and so. From there, we bought almost 8 to 9 crores of shoes, and some of the trading turnover is from finished gloves also we buy. So that is what we have done. So the only difference since previous year is that till previous years Mallcom safety was Mallcom BS safety gloves supplying nitrile gloves was doing job working for us. Now they are supplying finished goods. So there is increase in trading volume, but that is only due to purchase of finished goods from them.
So what I am not asking standalone, sir. What is the consolidated trading sales last year and this year?
Consolidated trading volume.
Sales, yeah. Value, you can give value, sir.
Yeah, value wise. So this year it is 33 crores and last year it was 25 crores consolidated. Yeah. Against 25 crores, this is 33 crores current year.
Okay. And these are now not from subsidiaries and anything, right?
These are not from subsidiaries. So yeah, so these turnovers are basically, I would say that mostly of leather gloves, finished gloves which we buy, and also some imported, PPE items which we sell locally in India. So these two types of.
And what would be margins, sir, on these traded products?
Yeah, almost similar margin which we normally generate in our own manufacturing for leather gloves, similar margin. So margin, whenever we are selling, we see that, the minimum margin which we have defined that has to be there. So same margin.
Okay. And sir, you said this 80 to 85% capacity utilization. So just a clarification, this excludes Ahmedabad and Ghatakpur, right?
Yeah, yes, definitely. These are for all existing units, yeah.
Okay. And sir, my final question is on growth. So if we see 4 or 5 years ago, our revenue was 250 crore. Today we are at, 350 crore. And I don't know how much COVID contributed, but it is coincidental that 2 years had COVID. And in COVID, gloves and protective equipment had some kind of tailwind. So I don't know if there is some COVID one-off in your numbers, but we have grown at, kind of low single digits for all these years, last 5, 6 years, if I take. So in, let's say, next 5, 6 years, you're looking at 500 crore, 1,000 crore. So what is it that you have to do to get there? And what is changing in industry, or what is changing in your capability that you are now talking about these numbers?
See, basically, talking of last 2 years, so COVID was something which we would say that, was something which not instead of contributing, it was basically hindered into our growth plans because we are mainly into industrial PP and the all the logistic regions and supply regions and manufacturing regions. These were problems for last 2 years where we had we tried to do much better, but due to COVID, the growth was on the lower side. So what we have done over last 2 years and the plans which we had done, that we have gone for expansion and capacity expansion and new units also. So going forward, and branding is something also we are targeting. Local markets also we are trying to improve, and now the scenario improving. So as Ajay ji already mentioned that within next 3 years we have a target of around 500 crore and then 1,000 crores. And with all the plans in place, now hopefully the COVID should not be there, and with the industrial activity moving up, so we hope that we could achieve much better results, and the plans are already in place for that.
So, sir, in these, growth, can you give some tangible parameter, like what is your order book, or how many customers we had, let's say, 3 years ago or last year, and how many customer engagements we have today? How many new products are, going to commercialize, or new contracts we are going to commercialize? Some sort of, tangible parameter to get us comfort that, this is going to happen.
So look at our past 2 quarter results, and you will have the lead that where we are heading. And then we also talked about our expansions, what we are going to do in our Ahmedabad project and the new Ghatakpur project. So there would be capacity expansion and new customers lined up. So these are some of the leads where you can just extrapolate on that where we are heading. So leads are already coming from our past performance, and we would like to maintain and improve on that.
Okay, sir. Thank you so much for answering my question.
Thank you. We have the next question from the line of Krishna Agarwal from Niveshaay. Please go ahead.
Sir, just a clarification I wanted. As you mentioned that the private labeling business is 2/3 of, right, and export is also 2/3. So can we fairly assume that the entire export is private labeling?
Yeah, almost probably 98-99%.
Okay. Also, sir, can we get an idea on who are our major competitors in domestic business?
So you have there are hardly who are dealing in all head-to-toe protection like we are. If you can see, our revenue is very evenly split between hand, body, and feet protection. And now we're focusing on head protection also. I don't think there'll be a company like this domestically. But we have larger players like Bata with its industrial wing. They are into safety shoes. Liberty with their Warrior range, they are also into safety shoes. So there are companies like this which are a competition for foot. Then there are competitions for hand and helmets, but all different players.
Okay. Also, sir, the major international players like Honeywell, they are our clients, so we don't really compete with them as such.
So it depends. Honeywell has their own manufacturing also, and Honeywell, is a customer as well. So some product categories where they are manufacturing it for themselves. Sometimes they would like to get it from outside also, and sometimes they do it for themselves. Honeywell also has presence in India. It's not like they don't, but they're still, our customers.
Okay. Thank you. That's it.
Thank you. We have the next question from the line of Sumesh G from Green Portfolio. Please go ahead.
Hello. Hi, sir. My question is regarding one of the wholly owned subsidiary where you made preferential allotment in financial year 21. So the shares were issued to AB Holdings Limited. So just wanted to understand who are these AB Holdings people and what was the rationale behind issuing shares to them? I mean, is it some kind of strategic joint venture or something like that?
Yeah, Shyamji, if you could take this.
Yeah. So basically, yeah, it is a strategic investment where they have already arranged, customer, the present customer is arranged by them only. So their role has been to, arrange for the customer for this new unit. And so that is the MOU we have signed with them, and they have been into this, activity like international business, and this is what they will be doing for us.
No, so who exactly are they, sir? I mean, I googled it. Like I couldn't find a similar kind of entity the way you are having. So where are they from, and what is their kind of business? Will their line of business?
Yeah, Ikem, you can just elaborate on this.
Yes. So AB Holding is basically a strategic consultant arranging for a lot of businesses, especially for PP, and that's where we have lined up with them to get us a customer who will buy 100% of from there. So, and for that only we have allowed them to be participative in the ownership of the company.
Okay, so they are European based, sir, or I mean
they are based in Middle East, but they have a lot of outfits in Europe, in Americas, in South Americas.
Okay.
Yeah.
Okay. Okay. That's it. That's it, sir. My other questions are already answered. So thank you.
Thank you.
Thank you. We have the next question from the line of Akshay J from Exportant. Please go ahead.
Hi, can you hear me? Hi, am I audible?
Yes.
Yes, thank you. So wanted to understand the capital cycle. If I see receivables, they've expanded materially over the last couple of years. Could you just help us understand how working capital cycle actually plays out in the domestic business versus the international business? What kind of receivable days?
Mr. Akshay, your voice is not very clear on the line. If you go off the speakerphone and ask your question, please.
Sure. Just a minute. Am I audible now? Is it better?
Yes, it's much better now.
Excellent. Can you help us understand the working capital cycle of the domestic and the export business? The reason I ask is I see working capital cycle has expanded materially in the last couple of years from some 20 crores to almost 70 crores. In all of the growth that has come seems to have sort of got consumed in the working capital.
Yeah, Shyamji, please.
No, it was not. I could not understood the question. So clearly audible.
I will repeat again. Can you just explain the working capital cycle? कि domestic business में क्या terms देना होता है? Export business में what is the terms like on the trade? Because working capital or the receivables have expanded materially over the last from FY20 to 22. So 22 crores was the receivables in FY20. It's gone to almost 65-70 crores in FY22.
Yeah. So basically, talking of working capital cycle, we have inventory holding of around say 45 days and 45 to 60 days, and then another data holding period of around up to 60 days. And the region of inventory levels are almost same. So in region for increasing in data levels have been mainly because of higher turnover which we could do in February and March. So what is happening that in January there was some impact of COVID where we could not make the shipments and sales as per plan, and then there was some push on February and March month. So due to that there is a higher data holding, and so that is the case. Yes.
Sure. Second is, can you take 2 steps back, help us understand the size of the opportunity that you have in the global landscape? Like what is it that you see over the next 3-4 years in terms of total addressable market that you have, where you can play an important role? That would be helpful.
So if you see, so I can take this. So if you see, some global landscape which is changing in our kind of industry, there's a lot of inorganic growth happening with bigger players. There's Honeywell, there's Bunzl, there's Ansell, who are acquiring a lot of smaller players and becoming bigger and bigger brand owners. And usually they would not like to keep a lot of manufacturing with themselves because a lot of labor, a lot of supply chain and everything. So they'll just like to be brand owners. So that's a good sign for players like us because we're happy doing white labeling for them. That's one point. The other point is, like I mentioned, the China plus one strategy happening. So especially countries like Australia, USA, and hopefully, with some more FTA signings with Canada or Europe or UK, they'll be also looking at India as a manufacturing hub. So that's the second reason. Third reason is increasing availability of raw material in India and the labor cost, cheap labor cost as compared to China and other places. And now, more importantly, the stability of the government as compared to our, other Southeast Asian counterpart countries. These are some of the landscape which are helping us, consolidate a position and giving us good growth prospect in the international market.
Sure. Thanks.
Will that be all, Mr. Akshay?
Yes, thank you.
Thank you. That was the last question. I would now like to hand the conference over to the management for closing comments.
Yeah. Thank you very much, Anuj, for conducting this earnings call. I hope my team was able to answer the questions which has been satisfactorily answered. For particularly, I can see a few five questions from Krishna Agrawal, Ankit Gupta, Aman Vij, Saket Kapoor, Prashant Kumar, Rupesh T, Shumesh, and Akshay. I hope all your questions were satisfactorily answered. If you have any further questions or would you like to know more about the company, please reach out to us, to our investor desk or to Veloram Advisors. So thank you very much for joining this meeting. Stay safe and stay healthy. Thank you.
Thank you. On behalf of Mallcom India, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.